Okay, I want to welcome everybody to Forex Profits. I am your master trader. They call me Angela Powerhouse, the Scalp Queen Williams. Yes. And in this class, it was designed to give you a simple trading strategy that you can use for scalping purposes only. So when I scalp, what I mean is I get in, I grab money, and I get out. And so if you follow the strategy, you can get anywhere from $50 to $100 a day. Now that's a minimum. You should be able to grab and have $100 days. Now, obviously, if you're looking in a group, we have some people that are still practice training, and then we have a lot of people who are live trading. And the people who are live trading, you'll notice that they're making $300 a day, $500 a day, 1,000, 2,000, 3,000, and more. You know, we've had some people that had made 60-something thousand dollars in a day. We've had people make over $300,000 in about a 5-day time period. So it can definitely happen for you. You just have to take your time, and you got to learn the strategy, and you have to practice. And so we are in session 4. This is a 4-week course. Now, I know some of you, this may be new to you, but I record all of the training. So under the files tab in the Forex group, you'll be able to watch all of the replays. And I recommend that everybody rewatch the videos over and over until the trade strategy is something that you see it. And as soon as you see it, you got confidence in taking that trade. So before we get started, let's talk about the disclaimer. I am not a financial advisor. I will not tell you what to invest in nor pick stocks for you. This training is for educational purposes only. Please be aware that all trading transactions can result in potential loss, and you should only be trading with disposable income and not leverage more than you can afford to lose. Information disclosure. You guys, I cannot stress upon you that this is actually a product from my business. And I am the owner of Financial GPS 360, and I have a number of different trading courses. So this is copyrighted material. So what I am saying to you is you may not discuss, share, reproduce, copy, reprint, modify, rewrite, create, distribute, publicly display on social media, publicly perform, license, or sell content retrieved or learned from this presentation without the express prior written permission of myself. Now, the Forex group, I wanted to mention, this is a private group. This group is really for paid members. These are for people who have actually purchased this course, and I did a special promotion for people who were a part of my econ team, where obviously if someone comes into my econ because they do need the financial foundation, and they do need a tax shelter, because as you start to trade and make profits, if you do not have a business in place, the government is going to get about 40% of your money, and that is not something that we want to happen. So everybody is in my econ. So as an active member in my econ, you do have access to this class. So your $34.95 membership is paying for your access to this class. Now, you don't pay your membership, then you will be removed, okay? Because again, sister ain't free. And so another thing is, do not add anyone who has not paid for the class, or anyone who has not joined our Lifestyle Changers my econ team. They do not have access. Your friends, your family do not have access to this group, again, unless they are a paid member, okay? So if you know anybody who might be interested, please reach out to me. So let's take a look at the markets today. So if we looked at US 30, you would have noticed that US 30 ran sideways the entire day. So if you were trading US 30 and you found yourself losing money, it is because the market was moving sideways and you did not recognize that the market is moving sideways. Now with our broker, which is Hugo's Way, the time is more of an international time. And so to know what time the New York Stock Exchange opens, it opens at 8:30 in the morning, but you need to start looking at the markets prior to that. So if you look at 8 a.m. Central Time, that is 1600 time on your Hugo's Way. So if you want to go back and see what the markets did in the morning session, which is where there's the most highest volume, you want to go to the 1600 time, and you'll know what happened at open. Okay, so that's what I did. Again, this is US 30. So when the market opened at 8 a.m., even though the market opens actually at 8:30, but at 8 a.m., what you saw is that the market created a high. So this was a high point here. When the markets opened at 8:30, it actually started to pull down. All right. And as you can see, at no point in time right here were the candles below both moving averages. The candles did not reach below the moving averages to right here. Okay. And so as you can see, it hit, this will be the first candle confirmation. But the second candle confirmation, the problem is this candle wasn't red. This candle was a green bullish candle. So it actually pushed up. And so what that is letting you know, if you look at the time frame prior to 8, so prior to 1600, you will realize that the US 30 was moving sideways. You can look at the candles right here. The market was sideways. Okay, and then when the market opened, it pushed down, but it did not create a lower low. It did not create a lower low. It stopped right here at this price point, and a bullish candle started to form, and it started to move back up. And so prior to the open, I knew that the US 30 was moving sideways. And when it did that move, I knew that US 30 was moving sideways. And so literally, that is one reason why I don't trade to open. Like I do know that there are some traders, and there's some traders in this group that do take trades based on the opening bell. They get in, and whatever direction the candle is going, that's what they choose to do. That is not the trade strategy. And for myself, when I first was trading, I was doing that too. And I was making really, really big money trading the open. And everything is good until it ain't good. And then the open started being erratic. It started going all over the place. It wasn't in one direction. It will go down in 1.2 seconds. It will shoot straight up. And you don't want to get caught. And so what I have done for myself, and a rule that I apply for myself, is I actually do not take trades until after 8:45. Because usually after 8:45, the markets will tell you where it's going, what it want to do. It will establish the range for the day, and you can literally trade it. And so basically, if you waited to 8:45, you would have saw this move happen. So this was the high, this is clearly the low, and then it started to move up. And so since I understand that I am in a sideways market, all I'm going to do is I'm not going to take any trade until the trade gets to the top of the range. So this was the high because it was established. And once that high was established, I went ahead and I drew a horizontal line across the top from the high. Okay. So that's where this yellow line will come from. Once it hit its bottom, because it's moving sideways, so I'm not doing nothing but watching. So when it established the bottom and moved up, I drew another horizontal line. So I already know that this is the high and this is the low. And so what I'm going to wait to see is, once it hit the high, am I going to get a bearish candle with a wick at the top of the candle, indicating rejection of higher prices? It's not breaking the range. It's staying within the range. And what could I do? I could hit sell. So if you want to trade a sideways market, you got to know the range. The moving average lines do not work in a sideways market. Okay, it does not. It only works when a market is trending and creating lower lows or higher highs. If that is not happening, it is not, it's not trending. All right. And so I would hit a sell here, and I will leave it open with the expectation that eventually it's going to go up, it's going down, go up, go down, and it's going to go down and hit what? The bottom of the range. So once it gets at the bottom of the range, I close out my position, and then I'm going to wait and see, will price action break the range and go further down and create a lower low, which means now the downtrend is about to take effect, or is it going to maintain the range? So in this case, this candle broke through the line, but when it closed above the line, creating a wick. All right, well, guess what? It's not breaking that level of support. The next candle was a bullish candle, but it didn't really go nowhere. It closed, but still above the support line. The next candle broke down through support again, but when it closed up. It still created these little wicks at the bottom. When I see candles with wicks at the bottom on a support line or even a range line, that is usually going to give me an idea that it's going to reverse and go into the opposite direction. And another way to confirm that is if you look down at the RSI, you see that the RSI is touching very close to the 20. And I'm going to go over the RSI tonight so that you'll know what it's telling you. Okay, so obviously, if I looked at the RSI, the blue line is going down to the 20. So that's letting me know is that I need to start looking for some reversal candles. I'm looking for some candles, candles with some wicks at the bottom, right? Because that means that it's rejecting the lower prices. And so then I saw a bullish candle. So here's a bullish candle. And that basically showed a strong move. This is support. And then when this candle here started to form, and it was another bullish candle, I went ahead and I got in at the bottom. I will get in at the bottom of this candle. Not wait till after this candle closed, but as soon as this candle opens at the bottom and it is bullish, I would do a buy with the expectation of doing what? Holding it open until it get to the top of the range. That's how you trade a sideways market. So once you recognize that it's sideways, locate the top price, locate the bottom price, and watch the price action. Let the candles come to you. You are the ranges. You the bottom and the top of the range. Let it come to you. Don't just jump in and think you know where it's going. Let it come to you and then tell you where it's going, and then you take a trade. Now, obviously, when it got right here, I probably would have closed out my trade because it's at the top of the range. It did break out for a second, but it hit a level of resistance. Anytime price action hits one of the resistance lines from your Fibonacci, it will pause. It will pause, and it may be a little bit of a pullback to the downside. And if you're in an overall uptrend, it will make its way back up, okay? But you got to understand how resistance and support works, okay? And so just because it hit this resistance line, I'm not going to buy because it's a resistance line. The only way I will go in for a buy is, again, my trend indicator is green, and price action, meaning the candle broke through the resistance line and came back and tested it and turned that resistance into support, and give me a bullish candle, and then I will continue on with a buy. Okay. Other than that, whenever price action hits a resistance, it's going to be a stall. And so, again, you got to recognize what type of market you are in. So make sure you go back and you watch the first session, because I believe the first or the second session, I spent a lot of time talking about being able to identify the type of market you are in. Are you in a trending market, or are you in a consolidated sideways market? Because how you choose the trade is based on that. Remember, my moving average lines do not work in a sideways consolidation market. All you can do is range trade. Now, if you are someone who has to have an indicator to trade off of, if the markets are moving sideways, you can use Bollinger Bands. Bollinger Bands is a really simple indicator that you can use when the market is sideways, because literally you buying off the bottom band, selling off the top band until it breaks through the bands. And in that case, it's no longer moving sideways. Okay. So that's a way to do it. So you can use Bollinger Bands, or you could be like myself. I just draw a line across the top point, draw a line the bottom point, and I just change the ranges. I keep it really, really simple. Okay. So another way to know that you are in a sideways market, okay, is you need to zoom out of your charts, you know, because a lot of times when we are looking at this, the Fibonacci lines is actually an indicator that is in under files. So what you'll need to do is you need to watch the video under files that talks about how to set up your desktop charts, because I show you how to download the indicators, how to copy and paste them in your MetaTrader 4 folders, and how to put them on your chart. So you need to watch that video, and the indicator that you need to have on your chart, which is the Fibonacci resistance and support lines, and then you also need the trend indicator. The Guardian trend indicator must be on your chart. Those are indicators that you have to import into MetaTrader. So it's under files. The video on how to do that is under files as well. So again, I can look at the market close up and know that the market is moving sideways. But if you cannot see it before you take a trade, zoom out. This is what it looks like when you zoomed out. All right. If you zoomed out, what you'll realize is the initial breakout was down here. This was the initial breakout. And so if you got into a trade, you want the point of the strategy is for you to try to catch a breakout. When the candles cross over both the 50 and the 200 moving line, the first candle that breaks out is your confirmation candle. The second candle that opens above both lines, you go in with a buy. If the candles cross below both moving averages, then the second candle you go in and you're shorting. Okay. But again, you got to know when you're sideways and when you're in an uptrend. Now, if you look at this chart toward the left, the market was choppy. It was completely sideways. And then after it was sideways, at this point in time, it broke up and broke out. Now, this might have been the middle of the night. Clearly, it was before the move, before the open. Okay, so this could have been in the 1 a.m., 4 a.m. time period. You know, that's when there's a lot of money in the marketplace too, in the middle of the night. Okay, and so this was the initial breakout. It was right here. So anybody who caught this initial breakout, you literally could have got in with a buy and you just held it open. You held it open and it went all the way to the open at 8:30 a.m. So you went from the bottom all the way to the top, a whole lot of. Okay. If you miss the initial breakout, you have to wait till the candles come back and kiss the moving average. And once it kissed the moving average and it can break through the moving average, when you see a bullish candle close above and another one starts to open, you would have went in right here with a buy, and then you would have went to the upside. So yes, you missed all this. And the reason why I tell you to wait is I want you to have discipline. If you look into the markets and you see this big old uptrend, the thing is, you don't know how high it's going to go. Nobody ever knows how high or how low the market makers are going to take the markets. And so if you jump in just because you see it's in an uptrend, then you're chasing candles. I want you to trade smart. And so what you'll learn is that you got to have some discipline about yourself, and you got to have patience. Trading is patience. So wait for it to come and kiss it. Once it kisses it and it gives you some bullish candles, go in for your buy. So you missed the big run, but you still was in the money from here to here. And this was pre-market. So this time frame right here was like 7:30 in the morning, between 7 and 8. You could have caught this move in the morning. All right. And then the markets opened and look what happened. It's sideways. Look, this is an uptrend. it shot up, created higher highs. It pushed up, sideways, pushed up, sideways, pushed up, sideways, pushed up, sideways, pushed up, down, down. It lost momentum, pulled down, kissed the moving average, went back up and continued to trend. Okay? Look. And then once it hit here, it went down, it went up, created a lower high, broke down, went up, and just literally moved sideways. And so you knew that when the markets opened at 8:30, because of the way it pulled down and then created a lower high, it's not continuing the uptrend. So now you're sideways. So all you got to do is block off the top, block off the bottom, and trade it. That's it. That's all. If you want to trade a sideways market. The second option is when the market moves sideways, don't trade. So if you missed the trend, the breakout, you missed it. Look at another asset class. Go to NASDAQ or go to S&P. So if the market moving sideways in US 30, look at another asset class. See if you can get an opportunity. It's about patience, not chasing. Let's look at the SPX 500. It was completely bullish today, completely bullish. As you can see, the trend at the bottom is all green. So that's all it was all money to the upside. All you needed to do is, this was 8 a.m. So as you can see, there's a bullish, big old bullish candle. So prior to 8 p.m., this little candle right here closed above the 50, both of these, above the 50. And the reason why I ignore prior stuff is I only like to trade when I know there's a lot of volume. So I like to trade the New York session because there's a lot of volume. I like to trade the, 1 a.m., 3:30 a.m. block because there's a lot of volume. I don't really trade in low volume times because I want to get in and out. So that's why. So this candle right here is 8 o'clock. And this is right around 8:30 to open. So you could have got in here. You could have got in here. You could have waited to here and just did buy because you have multiple candles. After this bull and long engulfing candle, which is telling you the trend is breaking up, you got multiple candles that are all opened above the moving average. Okay, so just hit buy. All you had to do is hit buy. Now, clearly, if you got in down here, you'd have caught this one because this was your buy right here because the one prior was good. Then 8 o'clock, so you're going into the open. You could have caught this long engulfing candle, which was going to give you an idea of where the market was going to go once it opened, moved sideways, and then it broke up. So you could have picked any of these candles and got in at the bottom. Do not get into candles at the end. Bullish candles open from the bottom, they close from the top. Never buy at the top of a candle. Again, you do not know if it's going to go higher. Always buy at the beginning forming of a bullish candle if all the other criterias are met. The trend is green and that candle is above the 50 and the 200. So you literally would have did a buy. It went up to the first resistance line. You could use that as a take profit if you want to get out your trade. That's your first area, take profit. But if you got in down here, I will hold it open because you got in low enough so that you can see whether or not it's going to push through. So it did a little pullback, moved up, and then it broke through this resistance area, right? So it broke through resistance. So you could have still been in your trade. It went up to here, came back down. Now, what these candles are telling you is that it's trying to establish this resistance into support. Okay, and that's literally what it did. Bring up some more, came back down, kissed the moving average. So if you missed it here, you missed all of this. I'm not getting into a trade until it kiss a band or come as close to the moving average as possible. So once it does that and it gives me some bullish candles, this is a confirmation candle, got in here, I went to the top, it moved sideways, went up, and made its way to the second level of resistance. So this actually could have been your take profit number 2. Okay. Also, you could have did another way. Once it took off, once it hit your take profit and broke through your take profit and you wanted to do another buy here, you could have had your trade open, and then you could have did multiple positions where you literally hit the buy button 2, 3, 4, 5 times. Okay. And you would have had more leverage making your way up. So buy and buy 2 could be multiple positions being opened, or buy 2 can be if you missed buy 1. Don't chase. If you want to lose money, chase candles. If you want to make money, let the candles come to you and let them tell you what they want to do. NASDAQ looked just like the SPX. Sure did. It literally broke up and it took off. All right. And usually NASDAQ will go straight up. It go back to back straight up, you know. So so if you're looking at that, you will see it broke out. This was the first candle of confirmation. It broke up above the moving averages. It closed above the moving averages. And the very next candle, even though it's a bearish candle, it still opened above both of these lines. I'm in an uptrend. I'm gonna go in for a buy. And what happened? It went up. It went up. This red line was actually a critical point that I drew off of either the daily or the 4-hour. So it was there. So I was looking for this. This could have been my take profit. But what I know with NASDAQ is heavy in tech stocks. So Apple took off and Tesla took off. And so by Apple and Tesla taking off, I knew that NASDAQ was going to take off too. And that's exactly what happened. So I would leave my trade open. Okay. And it went to the second this resistance line here. That can be an area where you could have took profit, or you could have held it open because you got in way down here. Let's see where it goes. Now, see, the problem is if you're buying up here because you're chasing candles, you can't necessarily leave it open to see where it goes because you didn't catch the initial breakout. You're just chasing candles. So it might go up some more or it might not. Remember, when you're buying, you're supposed to be buying low. Always remember that. Am I buying low or am I buying high? If you're buying high, you 9 times out of 10 is going to start losing money. And so what you do is, if you miss this, what are you doing? You waiting for the candles to come back close to the moving averages. If it don't kiss it, it needs to come close. This was a nice pullback. It came close to the moving average. And then I got some bullish candles and you could have jumped in and did a quick scalp up. Okay. I hope y'all understand this. The strategy is real simple. And to sell, you're just doing the opposite. If the candles cross below the moving averages, then guess what? Your first candle confirms it. The second candle, you get in. And here's what I do love. You see right here, you see how close these moving averages lines were? They were literally laying on top of each other before the open. If you ever see that, that is an indication that it's going to be a strong move in one direction. You just got to wait for it. And that's what happened. It broke out. And when it broke out, it breaks out heavy. Okay. Hope that gives y'all some clarity. Somebody asked me tweezers. No. Well, Well, this right here, you would have thought would have been tweezers, but this is a doji, so that's not really included. I don't see any tweezers up in here, right here, not at all. Okay, and not here either, because as you can see, there's a wick at the bottom of this candle. There's not a wick here. Okay, in order for this to be tweezers, both of these candles cannot have a wick at the bottom, and you have wicks at the top. But the way the direction of this would made you think that the price action was going to fall down, but it actually pushed up. Okay, so that's NASDAQ was bullish. You also could have looked at gold. Okay, you could have also looked at gold. So keep in mind, I want to say I stick to like 4 or 5. I don't go beyond that. You guys know that I'm not heavy as far as a currency trader. I will do it if I see it. But I am a market trader because I am a stock trader. So I'm heavy in the markets, and I know it from the back of my hands, and that's why I trade it. But I have my indices. I will look at gold, and then it might be a stock that I look at, or it might be a currency pair. What you have to do is pick 4 or 5 that you want to stick to. I don't have to trade a whole bunch of currencies. I don't have to do that at all. I could just stick on indices and I'll make a whole ton of money. It's not what you're trading, it's are you applying the strategy? The strategy works for anything. It could be a currency pair, it could be an index, it could be gold, it does not matter. It works. So pick 5 that excites you, and that's what you do. If you're a beginner, especially when you're going into a live account, if you are a beginner trader, first time going live, I would say start with SPX 500. Then add NASDAQ. US 30 is probably going to be the last thing that you do, because number one, it's a little bit more volatile and you will lose more money the fastest. So I want you to go into progression. Okay, so start with maybe SPX 500 and do gold. And then as you master those 2 asset classes, then you add more asset classes to it. Okay, so if I looked at gold, I knew that gold was literally moving sideways. For the most part, gold was sideways because gold did a pullback and then it moved sideways. Okay, so that's what gold did. It did a pullback and gold moved sideways. So when the markets open here at 8:30, this is where the markets, it kind of pushed up and then it pushed down. It went back into this little range here. Okay, it pushed up and then it pushed down. So if you don't want to, if you notice that it's sideways, you do not have to trade. But if you want to trade a sideways market, just mark off the top, mark off the bottom, buy the low, sell the high. Real simple. But later on in the day, what did gold do? Finally, the candle started to break down. I do not take trades in between the lines. You see these candles here? These candles are in between the 50 and the 200. I don't trade in between the lines. The candle's either above the line and I'm trading, or they below the line and I'm trading. I don't do anything in the middle. Sometimes people be like, you know what? I think it's going to go down, so I'm going to go ahead and get in right here so I can get all the money. Well, anytime you trade in between the bands, you got a 50-50 chance of being right. I don't like 50-50. I like 80-20. So I would prefer to take my trades above or below the moving averages, because I know it works if you sit and wait. So yes, if you got into that trade in between the lines, you were right. But again, you had a 50% chance of being right. And so if you waited, the candles broke down. This candle broke down. This candle body is underneath the 50 and the 200. So that's the first candle confirmation. That candle closed below the 2 lines. Here's my second candle. A bearish candle opens at the top. And so it was red at the top. And when it opened at the top, It is below these two. I'm hitting sell at the top of the candle. I'm not hitting sell down here. I'm hitting sell up here, because you sell high on a bearish candle. You don't let a whole candle form. The only candle that you let form is that one candle that initially crossed below both lines. You wait for that candle to form and close. But the candle after that, if that candle opens up and it is below, I just hit short. Remember, I got an 80% chance of being right. Now, there's a 20% chance I could be wrong, and I'm okay with that. So when I see it, I just take my trade, because I know that if I did it 10 times, I'm gonna win 8, right? And so if I know that the market is trending and I got a downtrend, the trend indicator is red, and we're gonna talk about these MOKU clouds, then I knew I was taking a good trade. And so if you caught this, you got in here, and you could have hit sell 5 times, have 5 positions open, and rolled it all the way down. Okay, so you can do it 1 time, you can do it 5 times, but literally you're going to do it when you start to build up your account. When you first get started and you trading live, only take 1 or 2 positions. Don't do 5 at one time. As your account is bigger and you can leverage more, then literally you can hit the sell button 5, 6 times and be in a trade multiple times, riding it all the way down. That way you don't have to necessarily use a higher lot size. You could just have multiple positions open and your risk is lower. Okay, so in this case, yes, you made money. You made money. Now, I also knew that Tesla had announced that it was going to do a stock split. And so I traded Tesla on the Forex side. And obviously I'm also an options trader. I could have run Tesla on an option as well. The stock is too pricey to flip unless you have a significant amount of money where you could buy full shares of Tesla. But knowing that information, everybody first thing in the morning when the market's open, all you had to do was hit buy. That's all you had to do, because you knew that the announcement of the stock split was going to happen. And so that was just some positive news, because guess what? Tesla is over $1,500. And so if you do a split, it's going to come down to like a $200 or $300 stock. So more people will be able to get in on Tesla as if they almost not got in at the beginning, but they'll get in at a nice wholesale price. And then, you know, Tesla crazy. That stock is crazy. It's volatile. It will shoot up. It don't follow indicators. It do what it want to do when it want to do it. But as long as you know that, you just run, you just get on the train and you ride it. Okay. So I did take a buy trade. And again, when you know something like this is going to happen, you can have a higher lot size, because there is a huge possibility that is going to go in your favor, right? And so you could have traded Tesla in your Hugo's Way account. Okay, could have multiple trades, and it literally just shot up and went up. So this would have literally been a really good trade for you to take. And so what I do suggest is that you look at your look at Hugo's Way and look at the stocks that are available for you to trade. Now, all the stocks obviously is not there, but they do have all of the tech stocks in there. Okay. The blank gap, that just means that there was a lot of volume. Okay, so when there's a huge, there's a whole bunch of orders that came in at one time, and it was so much momentum and so much money that it shot it up so fast that it creates a gap. It creates a gap, you guys. So this was a whole lot of money. So people who, now here's the thing, you could have had a buy position way before they actually announced the stock split, just on a flipping stock perspective, because for the most part, Tesla had did a awesome pullback. And right here, down here on this red line, it had hit support. This was actually a coming along to a buy zone. If you look at the RSI, the blue line is literally just below the 20. It's sitting on the 20. So you knew a move to the upside was going to happen. You just didn't know it was going to be a big move because you didn't know anything about the stock split. But Tesla was already in a buy position. So those people who went out there and had a whole bunch of contracts with Tesla prior to the announcement because they wanted to go long because it was time for Tesla to do a bullish run, they made some good money because they were in right here. This gap you didn't experience unless you were already in a buy position prior to the market's opening. Now, once the market opened, you see where the price went. It went from down here with 1364 all the way up to 1439, all over announcement. So you, even if you got in here, yes, you would have made money, but you didn't make the most money. The people who made the most money was the people that was in prior. And that's the same thing when it comes to stock splits. A lot of people wonder, okay, should I buy Apple prior to the stock split or should I buy Apple after the stock split? Well, you got to think about it. The people who get Apple prior to the stock split, they are going to get the lowest price because by the time they're locked in at a price and then the market's open on the 31st, you don't know how many orders have to be filled because when you buy stock, it's first come, first serve. So when you're buying stock, you're really in position, right? And so if big money is in there and they're getting their orders filled, you behind them. So that means that Apple can open on the 31st when everybody said, oh, I know Apple gonna be $100. I'm finna go in and buy. But by the time your order is placed, it's $150 or it's $200. So literally you didn't get in at the lowest price, but you thought you was because you wanted to wait until after the stock split. And so that's a choice that you can make. You can do either way. But this is an example of what can happen at an open before your order, your stock order is even filled. Because remember, you can't place your trade until 8:30. This happened right when 8:30 happened. Before you can even hit the buy button, it already created this gap and this difference in price. And so you have to understand that. Okay. No, stocks is not the same as Forex. Forex is currencies. Now, if you are trading indices, the indices are the overall markets which move with the stock market, but they're not the same things. Stocks is something that you buy and you can own. You cannot own Forex. You cannot own Forex. Sometimes I hear people say Forex is an investment account. It is not an investment account. It is a trading account. Put 5,000 in a currency and just leave it there and see if you still got it a year from now. See if you don't blow your account. So it's not an investment account, okay? There's certain asset classes that you can invest and you're more likely to be able to grow your money over time. But Forex is not investing. Forex is day trading. It's trading, you guys. You're flipping, you're flipping, you're flipping, you're grabbing cash. But don't ever try to treat Forex as an investment account. That ain't what it is, okay? It just ain't. And yes, you have the ability to take a $500 account and you can grow it to 2,000, but you're going to have some wins and you're going to have some losses, some wins and some losses. And a bad loss can blow your account. So if you have the ability, obviously, to lose money in a short period of time, then you cannot treat it as an investment account because there are safer investments that are out there. But we're not in this to have investment. We're in Forex to make daily money. That's what we're doing. And so Tesla was a quick bullish run. And so all of the major tech stocks are kind of in here. So the FANGs are in here. So your Facebook is in here, your Apples, your Amazons, your Teslas, they're in there. So when you hear it on the news or they beat expectations or things like that, you can jump on your Forex side and catch it and still make money. Okay, so what I want to talk about is some truths. Now, y'all, I'm telling y'all, I sit back, I watch everything that you do. I watch all the trades that you drop. And I just want to give some words of advice. Now, you all grown, you can do whatever you want to do. These are your trades accounts. But what I am here to do is to try to teach you to not go through the learning pains that I went through. I'm trying to help you not lose the type of money that I lost in learning. I'm trying to lessen your learning curve, okay, and keep more of your hard-earned money. But here's some things I just want to say. Again, I ain't trying to step on no toes. All I do is shine shoes for people who listen. Number one, all I can say is stop. Stop trading large lot sizes. I see a lot of you trading large lot sizes, 2.0, 3.0. If you're in a demo account and you are doing that, please stop. Please stop. Please stop. Because your lot sizes should be based on the money that you're going to be putting into your live account to trade. Do not think for 1 second that you doing 2, 3, or even 1, and you're making big money in demo. Remember, you got a big account. That's a big trade account. You ain't putting $1 million in your live account. You ain't even putting $10,000 in your live trade account. And so sometimes it can give you this false expectation because you're making big money fast. What I want you to understand is I want you to take smart trades, but you need to lower your risk. Because when you trade in live, you're not putting up that much money. And so your account has to have the ability to take a drawdown. And for some people, you are winning because you have a big account. And what I mean by that is you're in trades and you're losing money. And you might be down $200, $500, but at the end, it end up going your way and you end up in the money and making big money. That's not going to be your reality come live. Because if you put $500 in your live trade account and you take the wrong trade or you take a bad trade, or you're not even following the strategy, you're just chasing candles. If it pulls back on you and you down $400, Hugo's way gonna close out your account. And you're gonna have to take that $400 loss. And you're only gonna have $100. So if you've been taking swing drawbacks in your demo account, think about that live. Because if you ain't got that level of money, you're going to blow your account. You're going to be mad as I don't know what. So you have to decide. It's up to you. What I'm going to say to you, if you don't want to be donating, listen, lower your trade size until you build up your account. Stop over trading. You shouldn't take no more than 3 to 5 trades a day. I know you be in the markets. I know you see all type of stuff. Trust me when I say, if you take more than 5 trades, you're going to end up losing money, especially in your live account. Always remember that when you're live, everybody see, not everybody, but big money see your trades. So when you trade live, the market makers see everybody's trades. They see everybody's stop losses. They see you. They see you. Okay? So understand that. It's different than demo. Next, stop trading in between the moving averages. I have seen some of you make some posts, and sometimes I look and I'll be like, man, they winning. And then I look at the chart and I'm like, but I didn't see a trade. How they winning? And then I realized you just trading however you want to trade. That don't work in live. You're going to blow your account. It do not take any trades in between those bands. If the candles is in between the bands, stop. Stop, stop, stop. Again, you got a 50-50 chance of being right. Some of you are getting lucky, but luck is not trading. A professional trader has a strategy and they stick to the plan. Next, stop trading against the trend. I know that it goes to the market is a bull run and it's nothing but buys. You see it at the top and you want to short because you know it's finna fall down. Don't do it until you become a experienced trader. Anytime you take, if the market is in an uptrend and you are shorting at the top, you are counter trading. You got a 50-50 chance of being right. Sometimes you're right. But boy, in NASDAQ, when NASDAQ take off, it take off. It ain't no top. So you try to short at the top of NASDAQ and see what happens. You're going to blow your account. Stop rushing to go live. I want you guys to understand this is not a competition. The only competition that you got is you. Remember, it's different people in different stages in this group. There are experienced traders are in here. Long-term traders are in here. Beginners are in here. So even though we have people that's trading live and they making big money, that shows you what is possible. That's all. That's what God is doing. God is showing you what is possible. So when you see people winning or you see me winning, that's showing you that it works. We're the confirmation that it's real and that it works. God is showing you what is possible, but you're not going to get that unless you learn it like we learn it. Put in the time like we put in the time. Practice trade like we practice trade. You not finna be me. I've been trading for years. So it's going to take time for you to get there. It's not going to happen overnight. I want you to understand, do not rush to go live. Now, the one thing that I'll say to you, take 10 trades. Take 10 trades. Do you win 8 out of the 10? Without a drawdown. Do you win 8 out of 10? If not, don't go live yet. Keep practicing. Your time is coming. Your time is coming. So just how you will see us make $1,000, $900,000, $2,000, $3,000, that's going to be you. It's going to be you. One day it's going to be you, but don't rush. Stop being emotionally tied to money. You are not going to make it if every time you lose, you get outside your body, you get upset, you mad, you depressed, you saying, I want to quit. You want to quit because you done lost some money. And the reason why you lost money is you ain't even following the trade plan, but you mad. Come on. You can't do that. You cannot be emotionally tied to it. So if you ain't got no money to trade, then don't trade. Don't trade. Remember I said, do not trade more than you can afford to lose. Because here's the reality. You don't win every day. I don't win every day. But I win 80% of the time. And so if you don't have an 80% win rate, you can't be emotionally tied when you lose money. When you lose money, you need to take it as a lesson. It's a lesson. There's a reason why you're losing money. Have you sat down and analyzed why you're losing money? If giving up is the first thing that comes to your mind, trading may not be for you because you're going to lose more than you win while you're learning. And that's why I say take the time and be in that demo account and use it until your confidence is at a level. Because guess what? When I take a wrong trade and I know it was a wrong trade and I lose money, I don't feel anything. I just say, you know what? You deserve to lose because you knew better than that. So I don't get mad. I just say, all right, you're going to take some smart trade. You're going to win that money back. That's it. That's all. Never defeat it. Just keep going. And like I said, if you're building your MyEcon business and you're getting an extra check, that can fund your trade account so that ain't money coming out your hard-earned pocket. You're using other people's money for you to make money, right? Please do. Check the economic calendar every day. Do not place a trade and you have not looked at the calendar. How do you know what's going to happen in the markets if you ain't looking? Watch the financial news channels. You are a professional now. This ain't no hobby. This is that fire your boss money. You can't play with this. Study your charts every day, even if you don't take a trade. Every day, I don't care how tired you are, you need to open up your computer, pull up your charts, and look and see what the markets did today. Next, you should be taking a practice trade every day. And when I say a practice trade, I'm not talking about just trading. I'm talking about trade to strategy. Did you see the cross? Did you see it? When you see it, did you take it? Go ahead and take it. If you missed it, did you wait for it to come back and kiss the lines? Once it kissed the lines, did you get a bullish confirmation candle? go ahead and do the buy. I want you to take a trade based on the strategy every single day. Journal your trades. I'm going to tell you right now, you are not going to win, and you're not going to win long term if you do not journal your trades. Professionals always track it. How you going to know why you winning if you're not documenting when you're winning? Does that make sense? If you losing, how do you know, how you going to know why you're losing if you don't write it down? Come on, y'all professionals. Review your old trades every day. So if you're journaling, go back and look at what you did before. You will start to see a pattern. And you're going to start to pick up the rhythm and the motion of the markets. Speak life over your trades every day. Every day you got to get your mind right. If you are having a bad day, somebody made you mad at work, or you woke up, you sleepy, you tired, you ain't got no energy, you can't focus, don't trade. Because your emotions will create the outcome that you do not want. And so what I say is always speak life over your trade. Always have, I'm going to win today. I'm going to take the perfect trade strategy. I'm going to make some money today. I'm so happy and grateful now that I'm pulled $1,000 out the markets. Yes, I am. That's how you need to be thinking. But if you ain't feeling good, don't do it. Keep it moving. Because all you're going to do is donate money. So these stops and do's is to prevent you from donating money. And I'm telling you, at one point, you're going to get to a point where you're going to be like, you know what? I'm just so tired of giving them money. And you're going to start doing right. You're going to start following directions, and you're going to start doing right. I'm trying to tell you. Again, I just want to talk on these lot sizes again, because it is so important. If you are new to trading, 0.01. Now I know you like, I only made $2. I only made $11. I only made $20. That's fine. You got to go through it. You got to go through it and build your account up. Then you can move up. It's all in due time. Stop rushing. So if you are putting less than $500 in your trade account, in your live trade account, you shouldn't be trading no more than 0.01, 0.02, 0.03, the most. That's it. That's all. Okay. So if it's less than 500, you got to stay 0.01 to 3. If you got $500 in there, you can kind of do 0.05.10. If you got $1,000 you putting up, you can do a 1.00, but you need a real tight stop loss. If you put up 10,000, then you can do $10 lot sizes. You got 100,000, you can do 100 lot sizes. Don't open an account for 150 and you trading a 1.00. That means that's $10, right? That's $10 a pip. You put 150 in there, you down 5 pips, you already lost $50. And you lost that in 2.3 seconds. Be a smart trader. Grow your account over time. And then as your account gets bigger, then you can take on more risk. But don't go gambling, because Forex ain't get rich quick. We make it look like that, but that ain't reality. It look like that because we are experienced traders now, but it's not going to look like that in real life. Not for real, for real. Okay, so you got to take the time. Again, make sure you got the checklist printed out. I gave you a checklist of what to look at and what your trade setup is, what it looks like. Do you have it printed out? How you trading and you ain't got to print it out? The cheat sheet for the chart patterns. How you trading, you ain't got it printed out. The trade journal, either you writing it in a notebook. I gave everybody access to my online trade journal through Airtable. It's under files. All of this is under files. You're not a professional trader if you're not doing it, don't have it, ain't printed it out. You have to be serious. Let's talk about the RSI. With the RSI, it is the relative strength index. And it's basically just telling you the strength or the weakness of an asset. So whether it's the indices, a lot of people who trade stocks, we do use the RSI. Okay. Now, for most people, they use the RSI wrong. And what I want to do is I want to explain to you how I use the RSI, because the RSI gives me two key points. Okay. The first point is the RSI is an alert system for me. Okay. And so the RSI, our RSI is based on a 14-day time period. Okay. So it's looking at the closing prices over the past 2 weeks. All right. And then we have our moving line here. Okay. We're looking at our little blue line. And what it has is it has some thresholds. And the default of the RSI is a 70 to 30 threshold. I have you guys change that. We do a 80 and a 20 threshold, because I have noticed that majority of the price action for indices will fall within that 80-20 window. Okay. Now, here's how people who are trading stocks use the RSI. And so the 80 line, which is this yellow line here at the top, when this RSI line touches or crosses over the 80, that is an indication that the market is overbought. So that means after a bullish run, the market may start to pull back. Now, if I was trading stocks, and let's say you were flipping stocks, some people will use the RSI 80 and say, okay, I'm finna to close out and I'm finna take my profit because I'm flipping stocks. I'm not doing long-term investing. I'm flipping stocks. Okay. So they may use the RSI, the 80 to say, I'm finna close. This is when I get out. Right. That's why when the markets go up and then they do a pullback, that's because people taking their money. They're closing out their positions and they're getting their profit. They're getting their green. Right. When the blue line touches or get close to the lower 20, that is an indication that that asset class or that stock is oversold. So what that means is that most people, if you are trading stocks, that is giving you an indication that you might want to look at buying at that time because you want to buy low, right? Okay, so when it comes to trading in the Forex markets, the way I use it is it's just an alert. It's just an alert. So whenever the line gets high, get close to the 80 or cross over the 80, what I am looking for is there any candles that is getting close to a resistance line? And I am looking for reversal candles. So that means I am looking for bearish candles with a wick coming from the top, because that may be an opportunity to do a short if I was counter trading, or it's giving me an idea when a pullback is about to happen, so I can wait for it to kiss the moving average line so I can get back in my trade. So that's just an alert. I do not get into a sale just because the RSI crossed over the 80, because I have seen it cross over the 80, go to 82, go to 90, go to 95. I've seen it before, because I told you, you never know how high it could go. You don't know how low it can go. So you're not using the RSI to take a trade. You're using the RSI to start paying attention. It is your alert system. And you let the candles tell you it's ready to reverse. And when it do, it's either you're going to treat it as a pullback, or you can short it and get a quick scalp from the upside. But again, that's counter trading. If you're in a bull market and you short, that's counter trading, 50-50 chance of being right. Now, I know that when the line goes down or close to the 20, what am I doing? That means I'm waiting for a downtrend to reverse. And so I'm looking for smaller candles to happen. And I'm looking for a bullish candle with a long wick at the bottom, because that means it's rejecting lower price action. And so that's how I use the RSIs to start paying attention. Okay. Now, here is the second important piece of the RSI that most people miss, but I want to make sure that you understand that. The RSI, when you look at your indicator, if you look down here on the left-hand side, I got the RSI, and you see a number next to it that is 39.4803. That's telling you the number, the current number with the current candle. Okay, it's at 39. So if I look at that and I see that it's at 39, that means that it's getting closer to the 20, right? But here's the most important piece. I use this number as a gauge of when a downtrend or uptrend is about to happen. All right. So if you drew a line across the middle of the RSI and put a 50 there, okay. Ugh, I don't know why my thing keep moving. So down here, if we look at this line, it was low, right? When this blue line crosses above the 50, that is a breakout to an upside uptrend. When the blue line is high and it starts to break down below the 50, it is moving to a downtrend. Most people don't talk about that of the RSI, but that's what it's telling me. And so when I'm looking at the RSI, I'm looking at it as, do I need to start looking for reversal candles? And then I'm looking at the RSI as confirmation of my uptrends and downtrends. So clearly, this is confirmation. The candles are over the moving averages. The candles is over the MOKU cloud. I'm in an uptrend. But if I look down at my RSI, this line, blue line, went from the bottom, crossed over the 50, and that's confirmation that I'm going into an uptrend. Okay. All right. Oh, what I also like to do is, if there's some highs and lows, I go back and just put my cursor on the top of these blue lines to see what the number is. I notice that it usually go back and test that same number, and then that'll give me an opportunity to do a counter trade if I want to, because it kind of retests the low. I noticed that with NASDAQ, when the RSI get between 23, 24, it seemed like that's the low it really want to go. It can go lower, but for a majority of the time, 23, 24 is going to reverse. You're going to see a reversal candle, and it's going to move up. Just so you know. Okay. The MOKU cloud, the MOKU cloud. Now, the reason why we have this cloud is because on our mobile devices, it do not mirror our charts on our desktop. Okay, it does not mirror it. And so I was trying to figure out what type of trend indicator I could find on the mobile version that will get us as close as possible to a trend indicator. And so I found this MOKU cloud. And to add this cloud, obviously, to your devices, to your charts, just watch the videos. I have a video for iPhone. I have a video for Android that will show you how to put all these indicators on your mobile devices. Okay, so let's look at this cloud. Your cloud is either going to be red or your cloud is going to be green. All right, red means what? Downtrend. Green means what? Uptrend. You are using this cloud as additional confirmation of a breakout trade. So our trade strategy is right here. This candle right here broke above the 50 and the 200, and it closed above. This second candle here opened above both moving averages. So guess what? Based on my strategy, you would hit buy. Now, what you'll notice is that these two candles is in a cloud. Usually when candles are in a cloud, it kind of flickers back and forth. It seems like it take a long time for it to break up and break out. It just flicks. And so usually when candles are in the cloud, don't trade. And so another, for people who are intimidated to take their first trade, you can wait until the candle breaks out of the cloud. So you see this little red cloud, the candle broke out, hit your buy. Now me, I'm buying right here, but you can hit the buy right here, because as soon as it breaks out of the cloud, it's going to be a big move to the upside. Okay. So whenever the candles are above a cloud, it don't matter what color it is. When it's above a cloud, the market is in an uptrend. When the candles are below clouds, you are in a downtrend. Now, remember, the key is you are trying to get and catch breakouts. When you miss the breakout, wait for the candles to come back and get close to the moving average or kiss it. Okay, so that's all the cloud is telling you. Candles above, you're in an uptrend. Candles below, you're in a downtrend. When candles are in the cloud, usually the markets are moving sideways. Don't trade. Now, I also added to your mobile devices only fractals. And these fractals is almost like resistance and support. Okay, because you have a phone, you really don't want to draw all these support and resistance lines because the screen is too little. You see this yellow line that's going across? These are manual lines that I drew, manual horizontal lines. You can do that by going to the top of your mobile app, and you will see a logo that kind of look like shapes, circles and triangles. When you click that button, it is going to give you the option to pick a horizontal line. So if you pick a horizontal line, you can move the line anywhere. So these lines right here, I drew. But as you can see, it's a mobile device. The screen is small. I don't want a bunch of lines. And so I use the fractals instead. So the fractals is almost like you drawing a line, except you didn't draw the line. So this fractal here, this is support. This fractal here, this is resistance. Real simple. So when you see some fractals together, you can literally draw a line across. That's your resistance and that's your support. So I only have this set up for, it's on Android, honey. You ain't looking. You got to look some more under files. You will see Android because I put it there. So that's what your fractals do. All right. Now, here's something that is so awesome with the cloud. If you'll notice, all indicators are laggers. All indicators are laggers. That means that I don't care if you use moving averages, RSI, MACD, it don't matter what you use. You can use the alligator, Bollinger Bands, it's all laggers. You will notice that all the indicators are behind the current candle, because the only thing that's in real time is the candle itself. Everything else is a lag of prior activity. Now, what I love about the MOKU cloud is that it has a future trend indicator. What you will notice is that your cloud is floating in front of your candles, giving you an idea of where the market could possibly be going. Okay, so if we looked at this mobile device, if you look down at the bottom, these candles was down low. But what you will notice is that the cloud is forming before your candles even get there. And so if you look right here, you start to see green. What is that telling you? It's telling you that eventually the price action is going to move to the upside. So anytime you got candles that's below the red cloud and you see a glimpse of green, it is going to be a move to the opposite direction. Okay. If the market is going up and it's above the clouds and you see a hint of red in the future, what does that mean? Price action is going to pull back. Okay. So the indicators is giving you two things here. It's telling you the trend, it's giving you a breakout, but it's also going to act like a magnet and pull you back. Just like the moving averages, it's going to pull the candles back. This is the only indicator that gives you an idea of later. Here's an example of what it looks like on a desktop. So down here, you see that the moving averages are real tight. They land on each other. You waiting for that big move. You just waiting. Markets opened up and it shot up, right? So this candle shot up. It's outside the clouds. It's above the moving averages. That told you right there, I'm in a bull day, boy. It's going to be green all day. You hit a buy. Okay. Now, here's the thing. As this is going up, this cloud is starting to form. The cloud is ahead of the candles. So the candle is down here, but the cloud is moving up here and it's green. Okay, you pushing up. The cloud is just going to follow up. Just follow the cloud. It's going to keep going up. It keep going up. So you caught the breakout, you in the trade, you making money. Or you like me, you woke up late. I missed the initial breakout. I'm just sitting back saying, hey, is y'all gonna come close to me? Maybe I missed the move for the day. It came close, got in here and caught multiple positions and moved up. That's how I made $900. But I was on the future side. I do futures and Forex all at the same time. Okay, so the $900 came from the future side, same NASDAQ, same plate. That's what I'm doing, right? Went up, caught that, made $900. So I missed this. Had I got this, I'd have probably had a $3,000, $4,000 day. But I missed it, and I'm okay. Every day is another chance, right? I'm getting here. I'm only taking smart trades. I'm all right. So I'm here. Now, while I'm way up here, this cloud starts to form. Red. Like, okay, I'm up here and it's green, but it's starting to form red. What that mean? That's the future. That means that eventually price action is going to do a pullback. That is why this happened. This was already there. And as you can see, the cloud is in front of the candles. So it's telling you the future. Okay? It's telling you the future. So this told me that it's going to be a pullback. And I don't know if it will go down and hit here or break all the way down and go into a downtrend. What I do know is that up move is going to pause for a little bit. And it's going to do a pullback and come back to my moving averages. And so what we're going to see is we're going to pull up NASDAQ and see, did it move the candles down? Because this was prior to 7 o'clock. Okay, so I'm expecting that I will see a move to the downside. So it's going to go under this cloud, and then eventually when it starts moving up, this cloud is really going to be support. So it's going to hit this cloud, boom, fall back down some more. Hit the cloud, boom, fall back down some more. And then it's going to start getting in the cloud. So when it get in the cloud, it's moving sideways. You got to wait for some volume to do what? See if it's going to push it out the cloud. So you'll know it's going to push it out the cloud if you see a hint of green start to form after the red. Okay? And so for you guys to truly understand this and to be able to grasp what I'm saying to you, you have to look at your charts every day. It ain't even so much about trading. It's about understanding what you're looking at and what the markets is saying to you. And so I'm trying to make it as simple as possible for you to win. What I need you to do is stop chasing candles and follow the strategy, because the strategy works. You'll win 80% of the time if you follow the strategy. Okay? Ain't nobody gonna make it as simple as I'm making it at the price that y'all paying to get it. Okay? It's just not gonna happen. Okay, so again, now for those people who are trading currencies, like I said, that is not the highlight of my day, but you can trade currencies. There are a couple of apps. There's an app that will help you kind of get an idea of some strong currencies to trade. That app is called Currency Heat Wave. And literally, when you're looking at these heat waves and you're looking at the strength of a currency, you're literally comparing a strong currency to a weaker currency. That's all you're doing, a strong currency to a weaker currency, so that strong currency be the front of your currency pair you trading, and that's what you're going to take your trades off of. Okay? And then there's another indicator, and the link to get this indicator is also under files. You just have to go through it. There's a link. This is an indicator. There's a company. I think you got to give them like your email address or whatever, and they're going to give you access to this free power indicator. And it's pretty cool, because what I like about it is it tells you the strength of the major currencies. Remember, it's a whole bunch of currencies and different pairs, but these are like the major ones. And then it even gives you the top 5 currencies and whether or not it's a sell signal or a buy signal, depending on the time frame that your chart is looking at. Okay, so if you set it to the 5-minute, it'll tell you what are the strong currencies at the time, at the 5-minute, and whether or not you should be looking for sales or if you're looking for buys. But again, you always pull up your chart. I don't care if you got a signal service. You do not take signals just because somebody give it to you. You pull up your charts, and do it make sense? Do your charts match what they're telling you to do? Because that's why I teach you guys how to trade. I don't give signals and things like that, because I want you to be a smart trader. I don't want you depending on any outside source to make money. You got to learn how to trade. You got to learn how to trade, because guess what? No signal is 100%. So you're going to win some and you're going to lose some. I don't care if you're copying and pasting. You're going to win some and you're going to lose some. But if you are a smart trader and you analyze your charts, when they give it to you, you'll know when to take it. And they may be off and you might be right. And so the point is, in this class, you're going to learn how to trade. That's what you're going to do, because you need to be able to make money without people. There's a reason why I don't trade live. I don't trade live because first, I want you to get comfortable trading by yourself. You need to be comfortable to be able to look at a chart, be smart about it, and take a trade, because you need to be able to trade anywhere without one soul. Because if you're dependent on me, if you only trade when I go live with you, then you're depending on me in order for you to make money. That's not smart. That's not a smart trader. So everybody that's in this class, I'm trying to make you a smart trader. I want you to be a confident master trader. Because if you can learn this, you can trade all asset classes. You unstoppable. You can make money in anywhere. You could be on a beach and you can make some money. I ain't giving you the fish. I'm teaching you how to fish. There's a reason why I have you doing what you're doing. There are some signals out there. You might be in a company that provides signals. There's another signal company called M15signals.com. They okay. You know, they do some, they good for practice, for you to learn how to trade currencies. They usually do some type of Telegram or Slack as a way to deliver the signals to you. They do have a free service. You can sign up just so that you can practice getting in and out of trades. But this ain't what you want to be dependent on in order for you to make money. But this is a signal service that I have tried before. They tend to give signals like in the middle of the night, which I always miss because I'm always asleep. So I ain't got time. I ain't got time. I'd rather pull up my indices and I could be in and out the market fast. in and out fast. But this is a service that you can use. Again, if you get a signal from a service, a third-party service, the one trade button is not what you're going to use. You're going to have to use the order form to place your trade. So when you go into your Hugo's Way, you're going to click tools, you're going to click new order, and then the box is going to open right here. As you can see, this right here is a trade, an alert that was given. Obviously I got the wrong symbol right here, but you will pull up the EUR AUD as your symbol. You want to make sure your lot size is what you want your lot size to be. You got your stop loss. They give you the stop loss. You got the stop loss right here. They give you 3 different take profits. I like to go with the middle number when I'm testing out an alert service. If I think they solid, and if I look at my charts and I kind of see where they're going, or it makes sense to me, then I might do the third take profit because I'm trying to maximize. But normally the second one is fine. So you're going to put the take profit here, and then you're going to do a pending order. A market order is if you're trying to go on the market right now off of the price. Like, let's say they gave you the buy price of 1.6181. If you're looking at the markets and you right around 1.6181, then you're just going to hit market execution and you're going to hit buy because they told you to hit buy. But if you get an alert and the market is not there yet, you can do a pending order, which is pretty much a limit order. Okay. So you will set it as a pending order. And then when you set it as a pending order, an additional box is going to pop up and you're going to do a buy limit. So it's a buy limit if they tell you to buy. It's a sell limit if they tell you to sell. And then you're going to put the price that they gave you at price, set it for, you can decide how long you want that order to be out there, and then hit place, and you're going to place your order. Now, always be mindful when it comes to a limit order. Limit orders are not guaranteed. A limit order is basically saying I want to get into a price at a certain price point. And limit orders are first come, first serve. And so if it's 100 people in front of you for the same price and they're only able to fill 50 orders and you're number 88, you're not going to get the trade. So just understand that when you do limit orders, it is not guaranteed for your orders to be filled. The only order that is guaranteed is market. But obviously, if you do market, you might be paying a higher premium, okay, versus a limit order because you're trying to get the best price. But again, it's not guaranteed to be filled. So a lot of people be like, I got a limit order, but I didn't get filled and I missed that trade. That's what happens. So just so that you know the pros and cons and how to trade your alerts. So what I want you guys to do is for the next couple of weeks, I want y'all to do a trade challenge. I want you guys to grow your accounts. Now, see, usually I ask people to give me their trade balances and all that. I'm not going to do that in the Forex group because there's too many people. And we got people in different stages. So this is just based on you and your integrity, because at the end of the day, if you rush to go live, you ain't finna do nothing but blow your account. All you're going to do is donate money. So the smart thing to do is to actually do the trade challenge. And so what I am looking for people to do is I want you to have an 80% win rate. If you can grow your account over the next 2 weeks and document your trades, did you win 80% of the time? If you did not win 80% of the time, you need to keep practicing. If you won 80% of the time, then you can feel confident in funding your live trade account and go. The markets are not going anywhere. They're going to be here a year from now, 10 years from now. The markets are going to be here. So it ain't no rush. I just want you to be confident. I want you to understand the trade strategy, have patience, be disciplined, and see if you get it. So that's the trade strategy for the next 2 weeks. Y'all actually ain't finna see me for 2 weeks. I'm going, what am I doing? I might be going into another area. I mean, another class, and then I'll be back. And then in September, I am going on vacation. So I'll be gone for like a week in September as well. Because I need a getaway. Yes, you know, when you make money, you got to play too. So That is it, and that is all. Oh, I know what I want to do. I want to look and see, did the cloud push the price action down on NASDAQ? So this is actually a demo. So let's see. Oh, well, it's right here. See, remember, they was right here, it was down here, and it pushed it below the red cloud. It did happen. Okay, it happened. It did exactly what I thought it was going to be. But it's low volume, obviously, because of the time frame. But you see this big old engulfing candle? This had to have happened right before this class, probably about 7:30, 7 o'clock up in here. It moved because it was kind of, we was right up in here, and then it broke down a little bit more, and now the candles is under the red cloud. And since it is under the red cloud, this is now going to be support. So it's going to keep banging up against it until there is enough volume to push it through, or when the money come, it may continue to push it down, because as you can see, it's kind of a simple line for the future. So it ain't red and it ain't green. So it's going to continue to move sideways. Once you start to see a clear cloud, you will know where the market is going. So it's right here. Okay, so it did happen. All right. So again, look at the markets. Keep doing your practice trades. A lot of people always ask me this one question, and I just want to say it right here. If your ticker symbols are not in your watch, your market watch, go down to the bottom of the chart. There is an empty blank white space. Double click it and then type in what you're looking for. So I did FB for Facebook, hit enter, and now that ticker is now added to my market list. So that's what you have to do. You have to scroll all the way down, go into the white area, double click, and start typing in the currency pair or the stock ticker symbol that you want to add. Okay. Oh, and one last thing that I want to mention. Again, the candles are up close. Their zoom in and zoom out button is right here. If I want to zoom out at the top here, I'm just going to press this button, and I could zoom. You can zoom out on your chart and then move it to the right, and you can see the big picture. This was an uptrend, and look at the market. It's sideways. It's sideways. Where are the candles? In between the lines. So what are you doing? You ain't trading, because the candles are in between the lines. You're not doing anything. And as long as it's under the clouds, in the cloud, you're not doing anything. So 9 times out of 10, it might break down some more, because you see how this cloud is kind of going down here. It's right here. These are like some resistance areas here. So it might break down some more and eventually fall down and give me a downtrend. Might go back and test this low. Who knows? Let's see what it do. Now, again, to take a quick trade, just so that people understand, somebody asked me about how to do the stop loss line. So again, I would not take a trade, because there is no trade for me to take. Okay. But let's say you thought that the price action was going to go up. I don't know why you think that. Go up or go down. Okay. And so I'm gonna do a sale. So let's say I want to do a sale, even though it's candle pushing up, but I'm gonna hit sale. So you see this button here, you just hit sale. Okay. Now you're in a trade as a sale. You see this green line? This line is letting you know that you are in a particular trade. If you look down at the bottom, under the trade tab, you should see your profit. As you can see, I'm losing money. But if it's positive, it'll be a positive number. If you're losing money, it's going to be negative. Okay. Now, if I want to, let's say I'm in this trade, and let's say, I don't know, let's say I think that the price is gonna go up, because what did I do? No, I think the price is gonna go down because I hit a sale. So I think the price is gonna be lower. I just think it ain't enough volume right now, but I want to set it so that when it hits a certain profit level, it's gonna take me out the trade. So what you do is you click on this green line of your initial order, which was a sale. I'm going to click it and I'm going to drag it down. When I drag it down, you see this red line form? This is going to be my take profit because I did a short and I'm dragging it down. So what I'm saying is if price action hit this point, take me out my trade. So I got a sale in. So if the price goes down and it hits this line, it's going to automatically take me out the trade. But maybe I want to make sure that I'm not in the wrong direction. So what I can do is I can set up my stop loss. So I'm going to go back to my green original entry line. I'm going to click it, hold it down, and I'm going to, come on. It's not, there we go. And I'm going to push it up. And let's say I'm looking at the right here. If it go higher than this, take me out. I'm in the wrong trade. Okay. And literally I wouldn't do that because this is a support. So I probably would move mine up a little bit more. And now that's my stop loss. And then I can go to sleep. If you want to, you can go to sleep. All right. Or if you're looking at your trade and clearly you see that it's not going where you want it to go, just hit X. So if you go down at the bottom here where it say profit, you see this X button here next to the profit amount. If you hit the X button, it will close you out the trade. So you don't have to sit and just lose money. Close out if you're in the wrong direction. And when you making money, you close out and you can ring the register. And so that's how you set it up. It's right here. Sale, my stop loss, my profit. Now, let's say it did start breaking down. If it started breaking down and I'm clearly looking at my charts and I think it's going to go past my profit level, I could drag it down some more and say, I'm going to go to here. All right. And then I can move. I can move. Okay. So I just want to make sure that y'all understand how to do your trades. The strategy works for all currencies. Yes. Look at the video and I give you the settings for the desktop because the MOKU cloud come with all these different moving averages and you don't need them. So I have you change the color so that you don't really see them. You can kind of see them. You see how my white candles look like they got a little black line through them. That's the MOKU cloud indicator. You can't delete the lines. So I turn them black because my background is black. If you got a white background, turn it all white and then it'll blend in because I only want the two lines. Okay, I'm in profit. Y'all see I'm in profit? I made $7.38. Yes, I did. It broke down. And so I'm going to close out and I'm going to take my $5. I'm out my trade. Took my $5 and I'm out the trade. All right. So literally that's what it is. And you do it. I did a sale, thinking to be a sale because right now I'm in a red cloud. I don't see no green cloud coming yet. So that's why, I know it could happen. But again, I would have never really took this trade in real life because I don't trade in between the bands. All these candles right here, they're in between the bands. I ain't doing none of that. I'm only selling when candles break below and go below the yellow and the pink line. I'm buying when candles are above both lines. That's me. That's the strategy. This here is a sideways, low volume moving market. I'm not in it. Okay. I'm not in it. So that is pretty much it for tonight. Again, I will put the replay of this video under files tomorrow. And like I said, rewatch the videos. Everything that you need is in files, everything. And so all you got to do is study those videos, have your notebook, take your notes, have you a trade journal and track your trades, and then watch the markets. Everything that I'm telling you, you will see happen in front of your eyes. And then as your confidence go, take them trades, take them trades. I ain't had a job since 2008. And so if you don't want to have a boss for 10, 15, 20 years, you better learn how to trade. That's all I'm going to say. That's it. That's all. All right, y'all. See y'all later. Have a good night and a great weekend. Good night.
Good night. Thank you.
Good night.
Good night.
Yes.
Good night.
Good night. Hey, Robin, how are you? Good night.
All right.
All right. Good night.